people that already have a lot of money, options are a really good vehicle for wealth preservation, and maybe a little bit of income over the top of them. A lot of younger people want to use options for speculation or for wealth creation. That's a totally different approach, but needs to be, taught from kind of a ground up level.
Welcome to the Business Ownership Podcast, brought to you by Awareness Strategies, helping you navigate the waters between entrepreneurship and ownership. Hey there, peeps. This is Michelle Nedlock, and I am super glad that you're here with us today because I am here with my most amazing guest, Mark. Mark, thank you so much for being here with us today.
Glad to be here. Thank you for inviting me.
Excellent. So give us a quick overview of who you are and what you love to do. What do you do for work?
All right. Well, my name is Mark Sebastian. I was a option trader for about a decade on the floor. So I got my start in New York on the American Stock Exchange, trading options there. Then moved back home to Chicago, where I'm originally from, and traded on the CBOE for another 6 or 7 years there. Then I started my business. I kind of got asked to guest speak at a conference and realized that there were a lot of people trading options and getting into some of these derivatives. I think we've seen what happened with Robinhood that really didn't know what they were doing, and kind of decided, hey, these people could probably use the help of someone that can look at an option, know what's going on. And so I started my my business OptionPit.
Awesome. So why particularly options?
Well, and this just goes to tell you what of the value of a good professor is at school. I really didn't have any interest in being an option trader until my junior year. Toward the end of the year, one of my professors from my first semester walked to me in the hallway and said, "Mark, I'm starting this derivatives class for seniors. It's going to be really hard, a lot of math, and you're going to love it." And I said, "Okay." He said, "I want you to take it." I said, "All right." So I did, and I absolutely loved it. And that got me interested in trading options, and here we are today. So for people that are like, "Oh yeah, teachers, they don't really a good teacher can really have a strong effect on your life at really any level, grade school, high school, college." Just so happened mine was a college professor. Shout out to Dr. Sean Houghton.
Nice. That's awesome. I love that. So talk to me about options, because I know there are people who know them in depth and there are people that don't have a clue. And I have not seen many people that are kind of in between. And I
Well,
am in the don't have a clue category. So feel free to talk about anything you like.
well, it's better to either not have a clue or to know a lot. The people that are in between, and there are a lot of them actually, that know just enough to be dangerous. Those are the people that you heard about with Robinhood that lost their shirt when kind of the pandemic boom in the overall market collapsed, and when the meme stock collapsed. They didn't really understand what they were doing, what the risk was, and how they could lose their shirt. Those were all the people that kind of knew what they were doing, but maybe didn't. They knew enough about options to know how to buy and sell them. They didn't actually fully understand the risk associated with them. And that is how so many people got their shirt handed them, trading on, Robinhood or Webull or some of these different trading apps.
Wow. Okay. So let's just back up the bus for anybody who doesn't know what an
Sure.
option is. Like, just fundamentally, what is it?
So an option is an insurance contract. That is what they're intended for. They're not used that way by a lot of individuals, but that's the way the big houses use them. Your Goldmans, your Citadels, your Bank of America's, JP Morgan's. They're an insurance contract. And what they allow, if the holder of that contract has the right or the but not the obligation to buy or sell a security. So if I buy a call option in, let's say, Apple, and Apple goes higher, that call option allows me the right to buy Apple at what's called the strike price, the price that I purchased the right to buy for. And a put option is the opposite of that. If I buy a put option, it grants me the right to sell a security. So what's the insurance value of these? Well, if I'm long a stock, I have a lot of wealth, let's say in a name like Apple. Owning a put option gives me downside protection in case what we saw happen in the earlier this year, starting in January, happens in a lot of different names. It gives me insurance. The alternative, the way a call contract is an insurance contract is, and we will see a lot of big company, a lot of big houses do this, especially right before a big sell-off. They'll sell their stock and buy calls. And so what that is allowing me to do is get out of my stock position. And then if I'm wrong and the stock goes up, I own this call option that it allows me to get back in at that strike price. So while people think of them as speculative vehicles, they're actually an insurance vehicle.
And in the kind of in the world of stock markets and trades, these are obviously tradable to the public, just like they would be to, and just like a stock would be. It's just a different kind of commodity, if you will. Awesome. So when you're working with people, do you tend to kind of take their portfolio and work with it yourself? Are you training people how to use them? What are your favorite ways of working with people now?
Yeah, so I do manage a little money on the side in a little hedge fund, but that's primarily just for some close friends and confidence.
I have a sneaking
Confidants,
suspicion that
if you
was a
will.
little understated.
What?
I have a sneaking suspicion that that was a little understated.
Yeah, but primarily what we do is, we walk through people, we work with people trying to figure out what their goals are, because there are a lot of different ways to use options. People that already have a lot of money, options are a really good vehicle for wealth preservation, and maybe a little bit of income over the top of them. A lot of younger people want to use options for speculation or for wealth creation. That's a totally different approach, but needs to be, taught from kind of a ground up level. So we built the program that we use based on the program that I got put through in as a trader. So when I started out as a trader, I got hired into a firm, and they made me learn for a good 6 to 9 months before they would let me start trading their money, and then they wouldn't put me on a badge for about a year. And I wish people kind of had the same approach. It's amazing how people will spend hours shopping online trying to save $10 on a new pair of shoes, or $50 on a new set of golf clubs or something like that. But they'll start trading options or stock and spend less time learning about them than, reading the instructions on a box of Kraft macaroni and cheese. And so when we work with people, we tell them, okay, you need to start from the ground up. And we basically took the program that taught me as a market maker and kind of turned it into something that retail traders could use to teach them kind of how the fundamentals of options, and then the ways to properly implement those strategies, and to put the edge on your side as a trader, because the retail public does in fact have a huge edge that they don't use. And that's the fact that no one can make them execute a trade. No one can force them to do something they don't want to do.
And what benefit does that have?
The huge benefit is that you can decide when you want to trade, right? When I'm a market maker, or if I'm executing for a customer, I don't really have a choice. I have to take the other side of the order. The general public can do whatever they want, so they can choose when to get in and out. That is a powerful tool that not enough people use.
So in other words, and I'm assuming, correct me if I'm wrong, that if all of a sudden the market dumped, I don't have to sell just because the value went down. I have the option to be able to hold as long as I want to and hope that it goes back up.
Right. There's that. Or, you can, if you think the market is going to go down, you can make somebody as a retail trader buy a stock or an option from you. And that is a powerful tool that not enough people use. People get married to stocks or they get married to their portfolio, and you see what happens when that happens. You can fall in love with some of the high flyers from 2020, and we saw people make millions of dollars in GameStop and then refuse to sell and watch their what was hundreds of thousands of dollars turn back into nothing. And same thing in crypto. Crypto is driven by greed. And when there's maximum greed, that is when a lot of people want to buy, and that's actually when you want to sell. The time to be buying stocks is when everyone's afraid, which is why in the last couple of weeks I've been telling people, okay, it's time to start buying some of these chip names like AMD and Intel. Not a recommendation. I don't do specific recommendations, but I'll guide people along, what I'm doing specifically.
Well, yeah, it is the fundamental of buy low, sell high that everybody goes, yeah, but when?
Exactly. And what a lot of people, they'll say buy low, sell high. I say buy high and sell higher, sell low and buy lower, and go for that. But when your neighbor on this, as long as the people around me have been saying, and I know, and I'm not taking a crack at the general public, but when I'm at a party and I have neighbors asking me when they should buy the stock market, I know it's not time yet. When I can go to a party and no one is asked, and
and they're all talking about that name, and it's like,
yeah,
oh, it's time to get rid of that
and when
name.
they're saying, oh man, I'm never buying again, or how low can the stock market go, that is when the time to buy. So pay attention to the psyche of the people around you, because the market is very driven by psychology. And that is, how I see algorithms and psychology and sentiment are really what drives the market.
Very cool. And here I always thought I just had bad timing. Meanwhile, I thought I had more, more in. I was more in the in crowd than I thought I was. It's like, no, they're just the masses. It's all good. So, who do you love to serve and support? Who's your kind of favorite client to work with?
Someone that I know it's going to be a bad experience for me with the client when the first thing they ask is, how is this going to make me money right now? That's like the same question that like my son is asking me when he's asking me what good is math to me. And I can sit there and try and explain the end game, and they're just not going to get it. So if the client that wants to just absorb knowledge, that just wants to learn and grow and dive in, the client that just wants the shortcut, the tell me what to do and when to get in, when to get out, that is typically not going to be our best performing client. And they're going to have maybe not a great experience. Now, we will give people trade guides on specific trades that we like and what our goals are and what our targets are. But until the client works with us and we're able to really teach them why we're having that approach, and we really get that buy-in, all they are is just somebody, pushing a button, which in the end doesn't work out well, because invariably they miss us saying, hey, we're getting out, or they miss us saying, hey, we're getting in, because they have lives and they don't know what to do. And what I really want someone to when they're done with us is not just know how to trade an option. I want them to know exactly what to do. When they have their own thesis or when they have their own ideas, how do they approach them? And that's really my target and my goal is I want to turn someone into their own trader, not turn someone into me, because they're not going to be.
Clearly you're already taken. So is there a kind of a psychological difference or a fundamental difference in personality types of people who would typically trade options versus stocks versus Forex, whatever?
Yeah. I would say people that are successful traders across the board are able to walk away from the computer and be done with it. That is the number one thing, is like this, to some people, can turn into a video game because it's just a bunch of blinking lights, right? If I showed you what my screen looks like, you'd be like, oh,
It's just
wow,
a
it is
score at the top of the corner,
just a
isn't
bunch
it?
of blinking lights with a score at the top. Right.
Are you trading
And
right now?
what?
Are you trading right now?
Not anymore, but
Oh.
the bell rings at 3:15, so I'm done. But the trader that views it as a video game is not going to have a lot of success, that doesn't recognize that there's real dollars involved. And the trader that can't walk away, that gets emotionally invested in the outcome. Dollars are emotional. But if you're trading and you allow yourself to get emotional about it or upset with it, that's gonna doom you, because we call it being on tilt, because it's just like a pinball machine, right? You stop working, you stop being effective, and that can happen to everyday traders just as easily as it can happen to anybody else that's upset. So whether I had a good day or a bad day of trading, my kids should have no idea. I don't really get a lot of joy in the wins, and I don't really get a lot of pain in the losses. And part of the reason, I think, is that I learned pretty quickly that the pain of losing, if you allow it, is far greater than the joy of winning. And so the only way to, I think, be happy as someone who's trying to make money for a living, right? And I don't mean work to make money. I mean, I'm literally moving money from one place to another to try and make money, is to be robotic.
Nice.
And
so you mentioned
just
earlier that the options have this kind of insurance quality to them. Is that what would attract somebody to trading options versus Forex or stocks?
Well, I think that what attracts individual traders is the cost associated with options. So, to my 6-year-old just got home.
Hi, Annie.
So, so
I
the
love
thing
the
that would,
excitement of when they come home. It's like, yeah.
I know, I had a good day. So
Yeah, we did know that she'd had a good day.
yeah,
That's okay.
so you take a name like Apple, all right? If I buy 100 shares of Apple, it's going to cost me, and Apple's $141 a share. I mean, do the math on that. You're throwing $14,000 for 100 shares. Apple goes up $5, you make $500. Your return on capital is, and I'll tell you the exact
For those
number,
of us who don't do math on the top of our head,
is a little, your return on capital is a little over 3.5%.
Okay.
All right, now here's the alternative. I go to Apple and I buy the December 142 calls. They cost me $4.10. That's $410 if I buy that, as opposed to $14,000. So I buy one of those, and Apple goes up that same $5. I'm gonna make approximately about $300.
Nice.
So I can make 3.5% on $14,000, or I can make 75% on $400. That is what draws people to options, and that is why. And that's why it's such a it's such a siren, right?
Right.
It's such a temptress.
Yeah, you can say that on my shows. It's okay.
What, a temptress, a siren?
Yeah, you were like, I don't know if I can say that.
I'm going back to Homer,
Exactly.
And so that's what makes them so attractive, especially to young people or people who don't have a lot of money.
Right.
But it's worth it. You're going to pay to educate yourself one way or the other. It's either how much you lose in the market, or working with someone like me who will
educate
teach you how to make money quicker, faster, and more of it. And that's what it comes down to. It.
Nice. And is it as kind of quote unquote risky as futures?
Different, but yes. I mean,
right.
I don't consider futures any riskier than stocks, right?
Okay.
futures trade 24 hours a day, 7 days a week. That's actually one of the nice things is you can get out whenever you want. Well, I don't 23 and a half hours a day for anybody who wants to correct me.
Fine.
Okay. All right. But I don't consider futures have a similar leverage to them.
Yep.
And what I would say is the one of the things that'll get people in trouble is they don't know how much they're actually risking. With stocks, they make you put up the that a certain amount of
difference.
money, usually about 50% of the dollars. Futures, you can put up a lot less margin, but you can get yourself in huge trouble if things fall apart. With buying and selling options, if you're just buying options, you can't lose more than you spend on the option.
Right.
So in that respect, they're less risky than something like a future. But what clips people on options is that there's a defined duration. So stocks don't expire. Those December calls I was talking about, those 142 calls that are for $4, they have about 2.5 weeks, and then they go out. And if Apple doesn't get above 142, they're worthless. So that's really where the risk is with options.
Very cool. So what would you say is your favorite part of your business?
What is my favorite part of my business? I really enjoy engaging with everybody in a big room when I'm talking about what I'm looking at. And so without kind of getting into the minutia, I really enjoy interacting with people as people are watching me break down how what I'm seeing, a trade I like, and how I want to execute it and get involved. And I really enjoy that interaction where people are asking me questions and I'm able to talk with them and engage and teach. The times where I really get a teachable moment, someone asks me a really good question and I'm able to spend 15 minutes really breaking down that question, or 20 minutes or an hour. I love that. I always like to tell people there's no such thing as stupid questions, only stupid people. And stupid people don't ask questions. So if you are thinking of a question, and this really applies to anything,
Yep.
if you have a question and you're thinking, I'm going to sound like an idiot asking this, it's not true. There are 10 other people that have the same question. So be brave and ask the question and get it answered. Because if you don't, you're just not going to know what good does that do you. Who is going to sit there in right mind and say, what kind of a dumb question is that? No one. So especially in this environment of online anonymity, you're truly at zero risk. I wish people use the anonymity of being online more to better themselves and ask good questions rather than to
Right.
troll. We would be a much, much happier place.
Absolutely, we would. Well, and I do love watching people like you, and I can only imagine because I can't see your screen, but I have a very good idea of what your screen looks like. And it always reminds me of a beautiful mind when all I see is like this jumbled mess of numbers and charts and stuff. And you guys just look at it like, oh, do you see that? It's awesome. It's like, oh, do you see where that's going? I'm like, no, I don't. I don't have a clue what you're looking at, but it's fantastical.
Yeah,
Awesome. So
being an option trader is a lot like nowadays is a lot like flying a jet.
mhm.
Um, the computer does a lot of the work for you. You're just moving things and navigating and kind of pushing buttons, and you have to understand what's going into it, right? Before a pilot gets on a plane to fly, right, they have to actually go through the education of how the plane works. I would invite anybody who wants to get into options or stocks or futures to do the same thing before they jump involved. Um, it's
Take your ground school.
your real money, right? Go through your ground school. That's right, ground school before you go up in the air.
I love that. So give us an example of one of your Cinderella stories of one of your clients.
All right, I can tell you a couple. I think my favorite is we had a trader, a trader that was a lawyer, and he's now a market maker on one of the floors. We taught him that well. Uh, I have
Wow.
I have another trader that was in a very, very bad job situation. She was miserable. She thought she was going to get laid off, and we've taught her how to make money to the point where she is basically doesn't need to work. She can just sit home and trade. But she buried herself in it. The success stories are not, I figured it out in a week. The success stories are, I spent a year teaching myself and grinding, and now I'm producing real dollars every day.
Nice. Well, and I think too that it becomes important, especially in moments of tumultuous economics, as you might say. I mean, I live in a city where we have a boom and a bust every 10 years. Like that's just the way it goes, and we get used to it. It's like if you live here, you're like, oh yeah, it's in a boom, it's in a bust. And it's probably not much different than New York and having, bear markets and otherwise. But I think a lot of people that are used to, or they like
What
to
city are
think.
you in, if you don't mind me asking?
What's that?
What
City am I in?
are
I'm
you?
in Calgary.
Oh, Calgary.
Canada. Yeah. So we're
Oh,
a big
nice.
oil and gas country for the
Yes.
last, 100 years, and it's just boom and bust. That's what we do. And I think it's important for people that get used to a certain level of complacency, whatever, and then all of a sudden the market does something bizarre, and you're like, what just happened to my retirement plan? What just happened to my whatever? And I think it's nice that there's always something like this, where there's always going to be people like you that right now people could jump in and start learning with you, and then 6 months from now have a financial education that they hadn't had in maybe 50 years, that
Yeah,
all of a
and
sudden they can put themselves in that position of economic stability, as opposed to looking outwards and going, hey, is the economy stable?
right, and don't and I will say this, I don't like financial advisors for the most part very much. I don't think they do a very good job. Um, for a brief period, I worked at a mutual fund, and I went to one of the conferences, and they gave me 10 minutes to speak, to go through our strategy. We were one of the primary strategies, and I sat through the rest. So, and there were, I want to say, 10 funds there. They each got 10 minutes. It was a 2-day conference. The rest of the conference was how to sell. And so if financial advisors spend about, I would say, 5 to 10x the amount of time learning how to sell you than they do actually learning how to service you. And there's also so much cost buried into when you invest. Your financial advisor is taking a haircut. Then they put you in a fund that's taking a haircut. And then the fund has partners that they're putting different things in who are taking a haircut. People don't realize that by the time they're done on an annualized basis, they're probably giving up 3 to 5% of their return every year, somewhere in that range. On the low end, maybe a little less than 2. And on the high end, it can be north of 5%. So the cost of these people, and who are no smarter than everybody listening here, trust me. The amount of money over a 15-year period that you can save learning how to invest yourself, if you have the ability to take the emotion out of it, is astounding. I'm sure you've talked about compounded returns and what that can turn into in a short period of time. But take your portfolio over the last 10 years and now look at your returns. Now add 3% to that and compound that every year for the next 10 years and see where you're at. And you are in a totally different place. So, whatever, learn to educate yourself in the financial markets. You can do just as good of a job buying a mutual fund as any financial advisor can. Just be aware of that.
I love that. Yeah, and I think too that after studying something for 6 months, the emotional charge out of paper trading, it helps to learn to kind of minimize that emotional charge. It's really exciting at first and really depressing. And then you're like, okay, we're just doing this, we're learning it, and we're good. Eventually.
I couldn't agree more. Just take the emotion out of it. Just play the long game, especially on the investing side. Play the long game. Play the long game. But playing the long game doesn't mean you have to sit idle while the market goes from 5,000 48 or the S&P 500 or the TSX loses 60% of its value. All right. Not to point fingers at the TSX. The TSX, which is the Toronto version of the S&P 500, it got so top heavy in Shopify. I'm sure you as a Canadian, I used to be on the Canadian Business Network a lot, and we'd look at Shopify, and it got completely overpriced. It became the whale of it. At a certain point, you have to understand where logic lies and be willing to rotate and move money. And a lot of financial advisors, no matter what country you're from, don't like doing that. They just want you in their cookie cutter where you're putting your certain amount in every month and they get their certain percent, and whether the market goes up or it goes down, they get paid. Mm-hmm. That is what they don't get paid when you're in cash a lot of times. Something to be aware of. Or loony in your case.
Or whatever Trudeau's turning it into, but we won't go that direction. So talk to me about what are some of the stumbling blocks that somebody might be having right now, and they're thinking, oh my God, Mark, I need you so bad, other than maybe they're going through a little bit of chaos in their finances. What do typically people come to you?
Yeah, so you get, you have right now kind of the FOMO and YOLO. All right, those two are fighting each other. All right, you've got the fear of missing out. You also have the you only lose once. And when the market is at these crazy highs like it was a year and a half ago, you have YOLO. Oh, I need to get in. Everyone else is getting in. You saw the same thing with crypto. But you also have this FOMO, and that FOMO, fear of missing out, works both ways, up and down. And so when the market is at its lows, people are so fearful that it could go lower that they're afraid to jump in. And when the market makes a rip-roaring rally in the middle of a bear market, they have that fear of missing out, like, I don't want to miss my chance. And they invariably buy the high before the market just sells off again. And that is, I think, the stumbling block, and why having a plan in a market like this where you're willing to buy. I've had a level where I am willing to jump into this market with my pinky toe. I've got a level where I'm going to start actively buying, and then I've got a level where I'm jumping in with 2 feet, and I don't care what happens the next day with those. All right, have those levels. And on the same thing is on the upside. Nobody ever cried over taking a profit. Take your money.
Not even the ones that had to pay tax on it?
I hate when people bring up paying taxes. All right.
Paying taxes. It drives me nuts. I'm like, really? Seriously?
Paying taxes
talk to a good tax accountant.
Is a good thing. All right. That means you're making money. Now, you can, taxes and commissions are the two things. Fight to get as absolute low of a tax level as you possibly can, and then stop thinking about it. Fight to get as low of a commission rate as you possibly can, and then stop thinking about it, and then just do what a logical person should do. That is what I would say.
I am so glad I got to push your buttons. I saw the top go and I saw the bottom go. So I'm happy now. That's awesome. So I know our listeners are going to want more from you. How do they start their journey with you?
I write a blog every day at optionpit.com. That's my home site on VIX and volatility. It's a little more high end, but I also have some other writers that work for me. I've got a macro analyst named Bill. I've got a chartist named Leisha, and a kind of policy guy named Frank Gregory that all write every day. There's a ton of free content that you can read about every single day. I've also written a couple of books which my first book can be one of your first books. My most recent book, which is this guy.
It's all written mathematical formula.
There's no mathematical formulas, but it is a lot of like charts and stuff like that you're not, that until you know what you're doing, you shouldn't pick up the book. Um, but go to optionpit.com and we can you'll find actionable content that will help you become a better trader and a better investor from day one.
I love that. And I think too, it's important to understand that, hey, I'm in the starting. This is kind of information I really need access to. Make sure we got the fundamentals and then the up, and it works well. There was one phrase that you used that I kept skipping over, meant to ask you, is the Cinderella story you had of the gal that, or of the lawyer, sorry, is now a market maker.
Maker, yeah.
What is that? And if you, and just explain
So
what
that
it
was
is.
what I used to do on the floor. So, I talk about how you have the choice to execute an order. Market makers do not. So market makers get the bid ask spread. So for instance, if you want to sell, if you want to buy that Apple option that I brought up, it costs $4.10. If you want to sell it, you only get $4.05. Market makers have to post that spread. They get so they get to buy for 405 and sell at 410 and trade that way. But in the payoff for that is they don't have a choice whether to take the other side of your trade. That's what that trader is doing. He uses market making, and then he does a lot of mergers and acquisition M&A deals that are, because he uses his law degree to his advantage as a market maker, which is nice. My favorite story is actually the woman who was absolutely just buried herself and become highly successful and is really a leader, and she'll actually help step in and pay it forward by teaching other traders, which is what the way I learned, right? Somebody had to teach me. It was a trader. Somebody taught that trader. And now that I've got these people that I'm working with, when we have people coming in that are new, we've got, a couple hundred people that are, or thousands of people that are willing to step in and guide someone along their way.
Nice. I love it. Well, and I firmly believe that, well, one, everybody should become an entrepreneur, and two, that they need to understand money, and whether they
Yeah.
choose to be an options trader or just understanding, taxes and how they work. It's a good start. Because once you start making money, you have to start learning how to either make more of it, how to invest it, how to, like, what are you going to do with it now that you have it? And sticking it into a bank account is a terrible freaking idea, and don't ever do that. So go talk to
Yeah.
Mark.
I mean, I love being an entrepreneur. I love doing what I do. Um,
Awesome.
I enjoy being, empowering the people that work for me uh, to help my business grow. I have 14 full and part-time employees now, that
Nice.
across different segments, and I've got five or six traders, people supporting them, and then a couple of people working on marketing and on operations, and then I'm, like I said at the airplane, I'm just at the helm, kind of making sure I'm on top of everything. Um, and being a business owner is about understanding where are you investing and what are the value of your employees, and how can you make your employees feel valued and feel fulfilled in what they're doing, while completing a task.
Love that. So I get to ask you, at what point in life did you know that you were a special kind of crazy enough to think that you could become an entrepreneur?
I got sick of being fired, and that was what drove me
What?
to start my own business. I'm a good business owner now. Was not always the best employee, and I think that was partially because of my construct. I would see, I was working for somebody um, that was trying to do what we were doing, but just was not doing a very good job. I didn't like any of their approach, and tried to lay out ways to improve. And they said, "Okay, well, how about you hit the bricks?" And that was it for me.
You're
Um,
like, okay, done.
I was
Let
like,
me show you
"Fine,
how it's
you know
done.
what? You don't want to do it right. I will." And that was really what drove me.
I love
So
it.
I had a 3-month-old at the time. My wife was really pleased with me, but it ended up working out all right.
Love it. Mark, you've been absolutely awesome. Any last words for our peeps?
Uh, Thank you so much, and I really appreciate you taking the time to listen to me. And check us out at optionpit.com. And like I said, educate yourself. Go read some books. Dig in. All right. Don't be the investor that reads the box of mac and cheese. All right. Be the investor that reads a couple of books.
Love it. Thank you so much for your time. I appreciate it, and I know how valuable it is.
Thank you for having me.
Peeps, this is Michelle Nedelec. Thank you for being here with us today. Be sure to subscribe to the show and share it with your friends. We love helping entrepreneurs grow.
Are you running a business over 7 figures but still struggling with technology headaches? Pay attention. You do not want to miss this offer. This podcast episode is brought to you by Awareness Strategies, who is offering a custom-built digital adoption roadmap for anyone running a business over 7 figures who's wanting to grow their business in the next 5 years. And it's not just a roadmap. They offer full implementation as well if that scares the out of you. Check out awarenessstrategies.com/roadmap for more details today. The link's in the show's notes. Don't regret not doing this. Do it now. That's awarenessstrategies.com/roadmap.